the needle on the record.
Welcome to Wage Cucking with JMO.
Welcome to another episode of Wage Cucking with JMO. We got a guest today, my friend David. I guess before we start, tell me a little bit about your background, like how you got in crypto and what you're working on now.
Sure. So I entered into the crypto space about 2.5 years ago. It was October 2020. And, before I joined crypto, I spent about 15, 16 years in traditional finance, in investment banking, and also private equity at various places, predominantly in New York. How I entered into crypto was quite an interesting one. I had a close friend of mine, we've been friends for, 24 years or so, based out of Taiwan. He's a co-founder of Kronos Research as well as Woo Network at that time. And I was in New York, in October 2020. And, he was bored, single in Taiwan, and was like, hey, Dave, why don't you come hang out with me in Taiwan? Because everything was kind of shut down in New York because it was COVID. And, at that time I was in between jobs. It was kind of like, very boring in New York. Nothing was really open. And then he basically said, hey, I'll make sure that you get to Taiwan. But when you come here, take a look at, the business that I've built. I don't know what you're going to do here, but I think, we can figure something out. So bought a one-way ticket. Got rid of my apartment in New York, went to Taiwan, kind of fell in love with the place a little bit, right? And basically stayed there for a year, which was much more fun than New York was at that time. Outside of kind of like, you just having to stay 2 weeks for quarantine, I got there.
Yeah.
Diligenced, right, his business. It was kind of funny because at that time I knew nothing about crypto. And when he basically said that, I started kind of two companies within crypto, Kronos Research, which is a market maker, and then Woo, which is, a liquidity network at that time. It was Woo Trade still. I basically looked at him and I said, are you building a fraudulent business, right? And then he's like, why don't you, I'll open up, why don't you, come and take a look, right? So I went, I spent maybe about 3 to 4 weeks just understanding what Kronos Research is all about, understanding, all the senior guys, like really just, digging in, right? And fundamentally understanding the business model of Kronos is, understanding the business model of what Woo was, right? And was like, hey, I think I can add a decent amount of value. So for the first, I would say 6 months or so, right? I focused on a lot of being kind of like a jack of all trades, more focused on what's happening with Woo Network. So ultimately help them with developing their business plan. Ultimately, we used that business plan and raised, a decent amount of capital. It was used in a Series A, which we raised, 40 million. And then subsequently, it was also used when we pitched to Binance, and Binance invested, Binance Labs invested in us as well. Subsequently to Woo Network, I was really thinking about, hey, I think I have a decent set of skills, but is it best utilized, just being tied to Woo Network, or should I be thinking about other things, right? I'm an investor by heart. We talked about this before. I'm a poker player, worked in investing more for the longer duration, right? Private equity is, you come in at a later stage, you invest in businesses and you kind of hold it for quite some time before you exit. You try to drive, value creation in those businesses, pushing a lot of levers, right? So for example, if they need to hire somebody on the marketing side, you introduce them to, who are the best marketers, right, positioned. And so decided to kind of experiment a little bit, right, with ventures. And this all really started with, I was kind of doing jack of all trades and started to talk to a bunch of custodians. One of the custodians that we talked to, it's a business by the name of Credo, which, I had a conversation with Anthony Foy of Credo, who was the CEO at that time, right? Really enjoy the chat, right? They were not ready for us to onboard as a custody provider because they were very, very early, right? But they were basically saying, oh, by the way, we are raising our seed round. And, this was 2 years ago. We basically said, well, we really like the team. We think that you've basically built the technology. You just now have to, utilize the capital to build adoption, right? Believed in kind of what they were doing. And then, decided to invest in Credo, and boom, that was kind of our first investment out of Kronos Ventures, right? At that time.
So before you got to Kronos, they weren't doing much VC stuff at all.
No, it was the whole VC side was started by me and three other people. We were dedicating maybe 20% of our capacity into this side, right? And then that kind of turned into 50% of our capacity, and then it turned into 100% of our capacity. So back then, maybe 4 people committing 20% capacity. Now, fast forward to today, we have 5 people that are full time with 2 advisors and 1 kind of venture partner type of person. We're still in the process of kind of expanding our network and trying to onboard more partners that can help us on the various aspects, right? So, fast forward to today, we've invested in quite a number of projects, right? We have a handful of portfolio companies, which, if you go to our website, I'll put it on there, but kronosresearch.com/ventures, right? Yeah. You'll see, a select portfolio, right? We've actually, this actually represents, some of the portfolios that become more well-established, right? We've actually invested in quite a few newer portfolios that we did not include in this list, right? Which will be added at a later date. But just to kind of give you a sense in terms of what we are looking at, right? It's diversified within crypto investments, but with a focus on infrastructure, DeFi infrastructure, trading infrastructure. So I'll pause there, right? I know I've been kind of going on a rant.
It's all good. So I wanted to ask, coming from a traditional finance background, what struck you the most in terms of like the differences between what you were doing in traditional finance and like your first foray into crypto, like especially the VC side of things?
Yeah. So what I realized about traditional finance, right, is everyone kind of comes from a similar background. Everyone went to like a top university. Yeah. They got really, really good grades, and they were funneled into, joining front office at an investment bank, right? Yeah. And so you didn't really have the diversified level of talent that you see in crypto, right? In crypto, you have very, very diversified group of users, which some of them may not have come from any education. Right. There are some really, really, really sharp people that basically were college dropouts, right? Yeah. Or didn't really, have the means to kind of afford these top universities. But then when you have a conversation with them, right, within like a span of 5 or 10 minutes, you realize how much you're learning and you realize how much knowledge they know. Yeah. And then you're like, okay, well, I really enjoy this because I'm meeting many people, not just from the same walk of life, but from different walks of life, right? Yeah. But I have to say though, right, and in the traditional finance realm, what really, what I think is super helpful being there for so long is entrenching your way of thinking, is this framework of integrity. Right. That, when you're in kind of like TradFi, it's ingrained in you. There are certain things that you just cannot do. Right. When we first kind of joined an investment bank, right, one of the fundamental things that basically said to you is, hey, you cannot do insider trading. It doesn't, it fundamentally, right, doesn't make that much sense. So, so what I do think is, there are pros and cons for the people that are coming from TradFi, right? I think the pros are you have a group of people that are highly structured. They're not going to, be out there to kind of like, less likely for them to kind of go out there to kind of scam you, more integrity. But I would say probably less creative in terms of thought because they're coming from like, the same background. I remember, right, the first 6 months in crypto was quite a learning experience for me. And I think I've learned more, my first 6 months in crypto than I did in like the past 5 years in traditional finance. And that was quite an awesome experience. And also, the other thing about the crypto industry versus the traditional finance industry is in traditional finance, right? Once you've learned that skill set, you can actually coast because the developments within the industries, right, are not, are not like really that significant. So just to give you an example, right? I used to focus a lot on banks, right? How much really new development are there, right? In terms of bank regulation, from an incremental basis, it's not really that much. Yeah. Look at what's happening in crypto, right? Every single month, it's like you have to survive like a new thing. I mean, look at what has happened over the last 12 months or so, right? We had Luna Terra, right? We had Celsius, we had, FTX, right? All of which is like, it kind of changed your fundamental way of thinking, right? And I would say that there's, if you are in crypto, right, it's very unlikely that you came out of all of these disasters unscathed, right?
For sure.
Especially me from a personal basis, right? I suffered quite a bit of losses on FTX while I avoided kind of Luna, Terra, Celsius, but couldn't avoid FTX, right? So
the whole crypto landscape is interesting. Like even the recent developments in technology. Like I remember when I got into crypto, like over 10 years ago, but Ethereum didn't exist. Like Bitcoin barely existed. I would say like Bitcoin was like a functioning blockchain, but like the on-ramps, off-ramps, the ability to exchange it, like liquidity, stuff like that, it was a small fraction of what it was today. And then we're talking about an era without like smart contracts, without like perps, without, leverage trading, without like the decentralized finance at all that innovation came up within like a few years at a time. So yeah, it's kind of crazy how quickly the landscape of crypto changes. So I want to talk about your thesis in terms of venture capital. In general, I'd say like the crypto space is a lot different than traditional finance or traditional investments because you have a lot of these projects are token based. So when you're like normally if you're in traditional finance, you're investing in like equity only deals or something similar, but the whole project token and like the tokenomics of the token add like a different layer to like your investment. So like when you're looking at projects that you're investing in, I guess talk a little bit about like what you're looking for. Are you in general favor more token deals or more equity deals? And like what kind of metrics or use cases for tokens do you identify before investing?
Sure, absolutely, right. This actual like thesis has been shifting over the last 2 years because there's so many developments kind of in crypto, right? The way that I see it, like the way that we're looking at it today, right? The safest investment would encompass a SAFE, which is subscription agreement for future equity, plus a token warrant, right? So you'll both have the long-term potential upside of the equity in a project with the potential for, gathering back some form of short-term liquidity, which is in the case of a locked up invested tokens, right? Now, how do I think about equity versus tokens, right? Equity is a defined measurement of economic accrual because, if you have a common equity in a project, right, you are guaranteed dividend distributions, and that's written kind of in the bylaws of the company, and that really fundamentally cannot be changed. Tokens represent many, many different things, right? It can represent value accrual. More and more so, right? The tokens that do represent value accrual will not be tied to US-based projects because then
the whole security issue,
exactly. Or it could represent, certain voting type of, arrangement, governance type of arrangement, right? Typically, we want this type of arrangement where you have equity. And then if there's an equity component, that on the token side, we actually don't diligence tokens that much because when we invest in a project, it's for the long run. And we know that tokenomics can be like, fully flushed out. If it is a token only project, right, we really kind of want to see what is the economic value accrual to the token holders, right? So there's many different accrual mechanisms, right? Some, you have kind of buyback and burn, which is basically allocating a portion of the net revenues for a particular project. And then, buying back the tokens, which makes, less of the supply, which inherently or, should make the value of each token worth more. Right. Or there's a, specific contribution to treasury. And I think if you kind of look at BNB token in its previous iteration, and you look at FTX token, right, there's some form of these economic value accruals, right? I do think that that's very, very, important to potentially have, right? The issue with just having economic accrual in a token is the management teams can actually change the economic accrual, right? It's not set in stone. It's not really locked. It's not like, okay, I have the guarantee of I have this equity instrument, right? And I know that, at least I will have the rights to the future dividends that this project would spit out to you, right? And this kind of this really goes with our fundamental way of thinking about projects, right? We want to invest in projects that over the next 5 years will build something that have a lot of users. And once they kind of get the user adoption, we want to find something that they can easily convert into a revenue generating model, right? So on a run rate basis, we're saying these guys are going to get a lot of users. Users will want to use the platform, and then they're going to figure out a way to make money, right? Which means that it's going to be, value accretive, right, for the equity, right? Which means equity is going to increase in value, and then then we can think about other ways to exit, right, as a VC. But before we kind of think about that, it's really just thinking about what is the long-term, traction of a particular project. Now, you mentioned to me, you wanted to kind of like, say what my thesis or what kind of projects are we looking into, right?
Yeah.
We actually had theses defined about a year ago and then on our website, but we kind of removed that.
Yeah.
And the reason why we removed that is because the overall crypto landscape, right, when it comes to identifying theses and all of this stuff, right, is constantly changing. Constantly changing. And I'm actually, I want to keep myself and I want to keep our team to have a very, very open-minded approach. And so it's more of reacting to the theses that each individual builder has. And then basically, taking a step back and thinking, and then kind of aggregating kind of like the knowledge that you have in the crypto space and saying, well, will this work? Can this get adoption? And then, bouncing around the ideas with other people that have a differentiated knowledge set with people on our team, or with partners outside of our team that are focused on other things, and just really just critically thinking through this, right?
Yeah.
And then we can say, okay, well, this works, but they need to do A, B, C or X, Y, Z. And then we kind of talk to the project. What are you thinking about? How are you going to achieve A, B, C? How are you going to, achieve X, Y, Z? Right.
Yeah. And then that makes a lot of sense. Like, I feel like the crypto space, especially in investing in projects, changes quite rapidly, where if you are too rigid in your thesis of what you want to invest in, and the crypto space moves like into a different era or into a different time span, where like your thesis is invalidated, you sort of get stuck with bags of sort of outdated projects that may have been good at the time you invested in. But as the crypto landscape changes, obviously, like some of these projects become more and more useless. The next thing I want to talk about, so I looked through some of the investments you guys made in terms of, it seems like you made a lot of investments in either like alternate layer ones or Ethereum rollup layer twos. I just wanted to get your general thoughts on how do you see the land? Obviously, that there's quite a bit of user adoption on Ethereum right now. And I'd say like Ethereum layer two, especially ZK rollups right now are all the rage. One issue I have with these rollup projects is that, like, if you look at the current ones, Arbitrum, Optimism, stuff like that, the fees on those chains are still being paid in the layer one Ethereum, right? So it's difficult. Obviously, like some of these chains have large user adoption, but it's difficult to see a value accrual for their native token if they're not like using it as a native fee-paying token. And I don't know if you followed the current drama with the current Arbitrum situation, but essentially the Arbitrum token was released, I want to say like a week ago at this point. It was airdropped to previous users, and it was supposed to be like a governance token. And like one of the first governance votes they had, the foundation basically attempted to invalidate it, saying it was just, we sort of have final say as to what we do with our treasury funds, and the vote is just a formality, which in my eyes removes the entire value proposition of the token if even governance on the first vote doesn't work. So what are your thoughts on these tokens and how they can have long-term, they can accrue value long-term?
Yeah, so I'll go. I mean, it's like a long-winded question, but I'll try to answer kind of what you mentioned, right, in a series of steps, right. I'll try to tackle the first, right, with token value accrual and like what's happening with Arbitrum, right. It kind of goes with what I mentioned before, right, where how are you going to design your token if the management team basically has control over value accrual? Then what is the true value accrual, right?
Yeah.
Now, what this means is, will the token have value? Absolutely. But can you fundamentally assess the value of the token? Or is it more the way that I think about token value, right? Like, and this is super interesting because it changed kind of the framework on how I think about valuing, even traditional equities, right? Like, traditional equities, right? A lot of the value is predicated on looking at it from a fundamental basis until kind of late 2020. Right, when the whole Wall Street Bet saga came, right?
Yeah.
You basically had like
GME, AMC, stuff like that.
Yeah, exactly, right. And this kind of fundamentally completely changed the way that I think. And I actually lost a decent amount of money by shorting GameStop stock, right? Because from a fundamental perspective, it actually made absolutely no sense, right?
Yeah.
And if you kind of look at the valuation of these tokens and all of this stuff, right? There's a significant amount of value being attributed to the meme or like, okay, it's similar to how, like, why does GameStop have value? Fundamentally, it's a dying business, right? The proposition of their business model is they're selling brick and mortar video games, right? Whether it's new or used, right? The entire distribution platform is going digital, There are, the PlayStation 5s and the Xbox, the new Xboxes, right? there's two versions. One is with optical drive and the other is without optical drive. And more and more users are buying the ones without optical drive. So then there's no market left, right? But yet this, the stock price was just going crazy off the roof, right? But this just tells you something, right? There is this arena of mean value, right? Us and our team, we would say we're not good at judging how will mean value increase and decrease, right? We are better at judging fundamentally, right? Will this thing, are they building something over the long run, right? So I see a lot of that within tokens. If I were to invest in secondary markets, right, I would pick the tokens that have, a very clear like if it's a governance token, then it has to be a fully decentralized governance, right? Where the people can elect to have value accrual. Like management does not have like an override button. If management has an override button, then it becomes an issue, right? But that's all going to, theoretically, that should be all reflected in the stock price and all of this stuff, right? So that's kind of my thoughts on this particular topic. Now, you mentioned, we invested in some layer 2s or alternative layer 1s, right? Yeah. To be honest, right, that's actually not our focus industry. We're actually more focused on, trading infrastructure-based projects, right? And we did, invest in a few chain-related, right, infrastructure. Right? So
they go a little bit hand in hand, some of them, I think.
Correct. So here's what I think about, the future of how this will all work out, right? I actually see, a future as going like different pathways, right? And it's separated by how the world will function, right? So if you look at decentralized networks, right, I see, there's 3 pathways of the world, right? In the first pathway, right, you're going to have multiple layer 1s, right? That'll all work. And then it's going to be interconnected by a single unifying bridge. Right. So for example, like layer 0 unifies, all of the different layer 1s, right? That could be where, in one instance, right, where the world is kind of potentially going to, right? In another instance is, Ethereum is known to be, the most decentralized network. People believe and people trust it. Scaling solutions, layer 2 on Ethereum, whether it's optimistic rollups or zero ZKs, right, being built on Ethereum will be the way. And all other chains kind of essentially fizzles out or kind of gets reconverted back into Ethereum, and everything is, layer 2. That could be like another version of kind of like the world. Maybe that's the case. I think, to your point before, right? How good, right? So optimism rollups, Arbitrum, and all of this stuff, right? They're not paying any fees. It's all being incentivized internally, right?
Yeah, exactly.
What happens when fees are being charged, right? How good is ZK technology? We're still at the early phases of ZK technology, right? Stark, we were investors in Starkware. We invested in them because one of our earlier projects that we invested in, DYDX, right, utilized Stark X, right, as one of the earliest implementable technology, right, that utilizes Starkware. And we're like, okay, they're early movers. It makes a lot of sense, right? But it's still, a lot of the technologies are kind of, unproven yet. What I would have to say is, though, right, I do think the aggregate valuation of like these ZK rollups, right, of like these layer 1s are a little heated right now, right?
Yeah.
multi-billion dollar valuations for a number of the zero knowledge, layer 2s, right? Some of whom, have no product, right?
Yeah, it's insane. Looking at the valuation, I'm just like,
a little unsure, right? The way our investment philosophy is, we tend to make bets for projects at a much, much earlier stage, right? We're talking about sub $30 million valuations, right? And investing a few $100,000 type of projects, right? Those are kind of our bread and butter. And then I think the third, right, evolution of this world is you have all of these, like everything is kind of like, you have Ethereum, you have like these scaling solutions. You also have other, different chains, but I think different chains would develop purpose for them. Right. So for example, like Aptos and Sui, right? What would Aptos be good for? What would Sui be good for? Right. I think we did not invest in Sui. We did not invest in Aptos, but I think, we recently had conversations with kind of Sui's BD personnel, right? And they're basically trying to capture a share of the gaming market. That's kind of like what they think as low hanging fruit, right? And easier to come on board, right? Is that going to be, the direction, right? We don't know, but I do think, in one instance, right, you have a lot of technologies, right? In this multi-chain world, a lot of them, basically say, they can do the world. They have like TPS of like 1 million TPS a second. Right? Is it really true? When
has it been stress tested?
Users.
Yeah, I love the new chains that come out that have some sort of like magical TPS number. But if you look at the on-chain users right now, it's a small fraction of that. And then like even the ones that have gained some traction, like I see Solana goes down quite a bit. Like even recently, the Avalanche C chain has been down quite a bit. So like I think there's a huge difference between like the throughput of like the theoretical throughput of blockchains and then actually being used and battle tested to see if they work under intense pressure. Yes, I wanted to talk a little bit more about ZK rollups. So it seems like they're a bit of the rage right now in terms of, I feel like no one really knows what they are or what they do, or if they're indeed superior to technology to say like the current optimistic rollups and stuff like that. I had Arjun from BitDAO on the podcast, and we discussed a little bit about their layer 2, the Mantle project, which initially launched as a optimistic rollup, but like on testnet, they said they were going to seriously test some ZK technology and possibly convert their layer 2 into a ZK rollup. So do you think this is because it actually is superior technology, or because it seems like if you put, ZK in the name of your project, your valuation goes up like 20% immediately, which it feels like that's the case these days.
Yeah, I think this is kind of what I watched Brian's comment, right? And Brian Pellegrino from Layer Zero basically said that, sometimes when a project puts ZK in their name, they automatically increase their valuation, right? I think it's a little bit of, to be honest, right? I actually think, if you talk to the tech developers, right, from a pure gas cost perspective, right, people actually say, optimistic rollups, right, may have like the lowest recorded gas cost, right, at its end state versus ZK, right? But I'm not a tech guy, so I don't know exactly, how that would, completely work out. I do think we are absolutely at the infancy stages of ZK development, right? And much more remains to be seen, right? I want the world, what I would love to see, right, would be, okay, you can scale, right, and have the benefit of the decentralized network of as Ethereum, right? But, when, 10x the amount of users, right, are onboarded onto the Ethereum network, right, your gas costs are not absolutely absurd, right?
Yeah.
It's interesting because now, we're in a bear market and gas costs on Ethereum are actually kind of manageable versus kind of like what happened during the bull market when I wanted to, send one transaction to another. And it was like $50 worth of like ETH that you need to basically
contract interaction sometimes goes up like a couple $100, which just prices out a huge number of people.
I still think, right, that remains to be tested, right? The security aspect also remains to be tested, right? But, the amount of funding some of these companies have raised, right, allows them to basically hire the best and the brightest talents to really build upon this technology.
All right, the next thing I want to talk about was I noticed a lot of the investments, at least on the Kronos side, you invested in something like CowSwap, Paraswap, which are sort of aggregators that essentially allow people to trade on chain. Well, when I started using on-chain trading products, that this was probably like 2016, 2017. It basically started with Uniswap, or even before that there was like Ether Delta, stuff like that, which is basically a terrible version of Uniswap. But they only had one exchange model, which is automated market maker. Basically, you're quoted a price, and then you execute that trade at a price. And now, in like the past few years, there have been quite a few innovations where you can put in like time or volume weighted orders. You can put in limit orders. You can trade perpetuals. You can trade synthetics on chain. So I wanted to ask, with the growth or like the expansion of all these products on chain, and I'd say the loss of trust, at least to some degree, of the current landscape of centralized exchanges, like the whole FTX fiasco, a lot of the BlockFi, Celsius going down, or those didn't exactly focus on the trading side of things. But even like the recent Binance FUD, where like the U.S. government came out and said that like basically Binance's internal internal team was possibly counter trading its users, or they were trading their own markets. In the future, do you see this as like, do you think that there's going to be more and more volume, or more and more people moving to DEXs exclusively, or do you still see value in having centralized exchanges?
Yeah, I think it's a great question, and we basically have a lot of clutter because I sit at Kronos Research, but see a lot of what's happening over at Woo Network, which is kind of an exchange incubator by Kronos Research, and Kronos Research is a market maker that trades predominantly on centralized exchanges. Right. Let me take a step back and talk about first, right, understanding kind of like the differences between decentralized exchanges and centralized exchanges. Right. You're right. Decentralized exchanges probably really kicked off with Uniswap, right, which is a completely decentralized experience with an automated market maker. Right. As a liquidity supplier, it's very simple. You basically supply two sides, right, and you just let it be, and you don't have to do anything. It's just a passive supply of liquidity, and you just let it go, and then you suffer the impermanent loss. But you make the fees, and you suffer the impermanent loss, and boom, that's a very simple Uniswap V2 model, right? Uniswap V3 kind of like shifted over to you have to select pricing ranges, so it's a little more active, right? And if you don't select your pricing ranges correctly, right, you can suffer like 100% like impermanent loss.
So it makes it a bit more. It makes it a bit more efficient, but then also like to people that aren't technical in terms of understanding like how these ranges work. Like you can lose a lot of money just providing liquidity.
Correct. So these are all fully decentralized trading experiences, right? What I want to introduce to you, right, is the other concept of there are decentralized exchanges out there that the trading experience is actually more centralized, right? Case in point, we invested in DYDX. So DYDX V2 is plugged into a central limit order book. Kronos, the market maker, we're very good at supplying liquidity on a centralized basis. So for these decentralized exchanges, right, that plug into a central limit order book, right, Kronos does a very good job supplying liquidity. We were at one point the largest market maker on DYDX for quite some time, right?
Yeah.
I actually see this as kind of like a model, right, for decentralized exchanges, right? It just matters of how you think about the ethos, right? Do people care about whether or not the trading experience is centralized or not? Some people may, right? But given but seeing how much volumes are being traded on DYDX. And now, DYDX is for perps, right? And then, hash flows for spot trading, right? But also plug into central limit order book, right? See how much volumes, right? It means that there's a significant universe of users that say, okay, we're going to be on this decentralized exchange. We don't really care how your trade goes through, whether it's centralized or decentralized. We don't care. We just want the best pricing. We just want, all of this, right? Now, the evolution of where these centralized order books are going to, right, will be a decentralized experience. This is one of the reasons why, DYDX with their V4 is exploring this kind of like on Cosmos, right? We also invested in Say, which is, they're exploring decentralized order books in the Cosmos ecosystem, and they've done a great job kind of building the ecosystem. And the fundamental thing about decentralized order books, right, is it will not be as efficient as a centralized order book. Just because as the moment that you increase your validator count to be greater than one and you have like multiple validators, your latency is never going to be as good.
Yeah.
Right. So where is that divide, right? We as sophisticated market makers, we want to play in an arena where we have an edge. And that edge would be an active supply of liquidity, such as, central limit order book, or, as the world evolves into decentralized exchanges, that could be also a decentralized order book as well. Right. Now, where do I see? So after the whole FTX situation, right, there is a greater need for essentially better custody of funds, right? So as a market maker, we're always afraid now, right, to put a significant amount of funds on decentralized exchanges because we're afraid that, we're going to lose it, right? And we can't really withdraw. Yeah. But there's a lot of, solutions out there that can mitigate, certain risks, right? So for example, a lot of the custodians, right? The Fireblocks of the world, the Coppers of the world, right? Have something called a walled garden, where if you custody funds with them, there will be certain exchanges that recognizes those custody funds and allow you to trade with the custodied funds on those exchanges, right? Yeah. That's super interesting because you've basically separated your trading experience with the custody provider. Yeah. Right. And now, Binance is actually very interesting. So Binance came out with their solution called Binance Custody, right? Which has since spun off into a new company. They rebranded Binance Custody into something called CEFU, CEFFU. I guess it's a play on like Seifu or all this stuff, right? Yeah. And that the super interesting aspect about Binance Custody or this is, if you custody your funds, right, on Cefu, Binance will recognize this and allow you to trade, right? But I think there has to be other hurdles that you have to kind of pass through, right? But that's super interesting in the context of a market maker, because it really de-risks us from having a significant amount of capital, right, on the centralized exchange.
Yeah, I think the whole FTX situation sent a bit of shockwaves throughout, like especially like the larger players, because many thought FTX was at a state where it was basically too big to fail, right? Like they had like huge amounts of money on FTX, so I felt like that sort of changed the landscape and people's thought process. Like when more people are looking into like better third party custody or even self custody. The issue I see now with stuff is that a lot of the good custody solutions are basically institutional grade, or they sort of exclude the individual user. So like if you have like 100 million assets under management, like Fireblocks might be a good solution for you. But if you're just like trading your own funds, like you won't have access to that technology. So do you see that changing in the future?
I actually see. So very, very good point, right? The entire custody like framework, right, needs to fundamentally change. Right now, if you're like a retail user, right, you're basically stuck with two options. Both are not really that good. Yeah. First is, okay, you can custody your funds on a centralized exchange, right, which provides an easier to use interface, easier to use experience. Me personally, I custody more of my assets on FTX because it was easier to withdraw and easier to kind of interface. Yeah. I had ledgers. I just had less assets on ledgers than FTX, right? Yeah. Which turned out to be fundamentally a big mistake. The other side of the equation, right, if you want to custody assets is, either on hot wallets or cold wallets, right? Hot wallets are not safe. I had a Windows machine that was hacked, right? I lost some funds on a hot wallet before. Cold wallets are notoriously difficult to make sure that your funds are like, that you have redundant ways of like, backing up your funds. Mm-hmm. So right now, I have a ledger and I have two backup ledgers to the same ledger. Mm-hmm. And I basically have like this way of like, setting my C phrases where I only carry like a specific part of a C phrase and I leave it somewhere else. Right. Yeah. So then, there's no way that I'll lose it. And, but there's no way that, if someone basically steals everything that I have today, they can basically have access to all my funds. Yeah. That has to evolve. That has to change. It's not, it's not an easy experience, right?
Yeah. Especially, I think if crypto is attempting to onboard new users, and like, well, one of the principles of crypto is, self-custody, you control all your own funds. I feel like there needs to be developed a much easier way where like, even me, I'm pretty technologically advanced. I understand this stuff pretty well. And it's still like a bit of a burden to figure out the self-custody aspect of the thing. So a lot of people that are new to the space that aren't so technologically astute, it's virtually impossible for them to have a secure self-custody setup that they can maintain.
The super interesting aspect of this, right? And, after speaking to a number of like newer projects out there, right? The newer projects are basically saying, we know that if we want to try to onboard as many users as possible, right? Creating a self-custody solution from the onset, right, is going to be dead on arrival because people are going to just be like, this is too complicated, all this stuff, right? And so the process is actually, and this I've heard from multiple kind of new projects, right, is to basically say, well, if you want to onboard users, right, we're going to come up with we're going to come up with custody your funds to start off with, right? To start off with, we're going to custody it. We're just going to onboard you as a user, right? There will be a process in the future where you can, custody the funds that we've custody for you. But for the ability for us to onboard users and how easy it is to use as a one-click setup, right, we need to create this process to onboard as many users as possible. And I kind of agree with that, right? Because we need as many users as possible, and technology is constantly evolving, right, when it comes to kind of custody solutions. I actually don't know if existing custody providers, right, would ever even want to target the
like
retail
user.
Right?
Yeah. Because like the market's a lot smaller, right? And it's
market's small. They really can't make money, right? Yeah. Would a retail user want to pay thousands of dollars a month, right, for a custody solution? Now, if they don't get thousands of dollars a month, right, what's the, for them, right, it's basically like the amount of money that they basically put in to do the BD, right, to acquire these users is not going to, it's not going to work out.
It's not financially feasible for them, especially when like they have these large institutions with like hundreds of millions of dollars in custody, and like they can afford the fees, and the business model is great for them already. So it seems like a bit of a conundrum, because because I feel like something must be developed for like the greater good of crypto in terms of like large scale user adoption, but the financial incentives for the individual aren't, or like the individual companies aren't there. It's what's it called? Like the tragedy of the commons, right? Like where people in crypto aren't developing products that are like good for the entire crypto ecosystem. They're developing products that are, good for the project that they're working on or their specific company, or they're a bit more profit driven than like ecosystem driven. So I hope in the future something comes up that makes like user onboarding, like self custody, stuff like that, all a lot more seamless for the end retail user. That makes it less daunting for them to get in the crypto space.
Yeah, the interesting take on custody solutions, right? And then people are talking a lot these days is basically account abstraction, right? Which basically is an upgrade that basically like makes smart contract wallets, right, natively supported on like chains, right? So Ethereum's thinking about this, right? And so like, you can define your own security rules, kind of recover your account if you lose the keys and things like this, right? I would love to see where this can potentially go, right?
Yeah.
Because all of these are designed to make the user interface, right, much easier. And so this is kind of absolutely needed, right, to get the average Joe who knows nothing about all this stuff, right, supporting crypto and feel safe about their assets.
Yeah. I think the average person, like I hope there's a day where like the development of crypto technology gets to a point where individuals will be like using blockchain technology, maybe trading like synthetic assets on a DEX and not even know that there's like any blockchain aspect to it, just because like the user interface is so seamless. But now it's a bit difficult to get to that point.
Yeah.
So the last thing I wanted to talk about before I let you go, I know that Kronos Ventures invested in some early stage blockchain gaming products, or
we've only invested in two gaming related projects. The first one is called Avocado Guild or Avocado DAO, right, which is listed on our website. And at that time, really one of the founders who I'm like actually close friends with, Brendan, right? He's a really, really fundamentally great guy. Really enjoyed his vision. But a lot of times, right, when the world is shifting from kind of like the play to earn model, right? Guilds also need to shift. So I think for gaming guilds, right, they're going down the pathway of a transition type of period. And then, so that's one, right? We invested in one gaming guild, but we also invested in one gaming project. Now, my fundamental, and I'm a huge gamer. I play like, I probably spent like, I would say that I spent tens of thousands of hours playing video games in my life. And that kind of segues on why I enjoy playing poker. It's kind of like like an extension of a video game and all this stuff. Fundamentally, right, I believe if you're going to make a game, build a game that's fun to play and then wrap everything around the ecosystem, right? And so the game that we invested in, the gaming developer shop that we invested in is called G4AL. It's a development team kind of based out of Barcelona. And their first game is basically a 3D RPG type of game. Definitely not a AAA game, but fun to play, right?
Yeah.
And their initial thesis was kind of wrap around an NFT ecosystem around the game, right? And this game is already developed, already fun to play. Valuation was very, very reasonable. And the development team came out of like legitimate gaming development shops, right? So they came out of Activision Blizzard, right? And also, so they were at King's, which Activision Blizzard bought, which I think now is a part of Microsoft, or Microsoft bought Activision. So it's like these guys really, really know what they're doing on the gaming side. And I fundamentally think that I would much rather bet on the guys that know gaming and they need to figure out the crypto side than the other way around.
Yeah, absolutely. It seems like in my eyes, like the previous iterations of blockchain gaming were either it's very worse, just complete vaporware. They have like a project and then they release a token and like the game never gets developed. Or I mean, I don't want to name any projects.
Yeah, I don't want to name any. I'll give a very, very high level example, right? They're at the height of the bull run, right? This is November 2021 in Lisbon during Solana Breakpoint conference, right? 2021, right? And this is at the height of the bull market, and you had like projects raising left, right, center, right? And there was a few gaming projects, right, raising at multi-$100 million valuations, right, with nothing developed, right? And if you kind of like, dig deeper into asking, the team about the gaming specific details, right? The team weren't able to answer that, right? They weren't gamers.
Yeah,
You know,
they were marketers, right?
they were
They're
marketers, correct?
basically
They were
that
marketers, and then if you kind of
yeah. So I would say that that's like the worst the worst examples, and then you have some that like gained some traction. They had some playable games, but a lot of the games were driven mostly by like a play to earn or token based ecosystem rather than like or organic growth or people playing for enjoyment. But then like as the markets die down, those games become less and less sustainable. So if like the daily admissions or the daily rewards given out on the platform for the games go down in value, then like you see that the user base stop playing or go to other games. The other issue I've seen is that like the current infrastructure, the current blockchain infrastructure isn't very conducive to developing games where the games are played on chain. So in the future, like how do you see this playing out for blockchain gaming? Like I know that there are like quite a few like you mentioned before, like the new move chains like Aptos and Sui, they may focus on blockchain gaming because their chains can process transactions much faster and much more efficiently than Ethereum. And then you have stuff like AVAX having like a subnet system. You have like a lot of Ethereum layer twos that are developed for one specific game. So all the transactions are bundled on like a specific rollup. How do you see the whole blockchain gaming experience playing out in the next few years?
I like to make an analogy. I always like to make an analogy when it comes to like blockchain gaming with the existing infrastructure, which is kind of like Steam store, right? Because Steam kind of 90% of the market share for PC-based games, right? But I think PC-based games have like the most variety now, right?
Yeah.
And they actually have like the most number of games, right? Valve charges a hefty cut on the Steam store, but that's because they're kind of like a monopoly, right? They have. If you're a gaming developer and you don't list yourself on Steam, you just basically lose out on a massive user base, right? That will buy your game. It's fundamentally a good game. Right. This is the first part that you need to disrupt. Right. And I think a lot of these NFT based projects are saying, well, we're going to create an NFT because you can sell the NFTs, right, without paying a hefty cost. That's kind of, given to Valve. I'm like, that's totally great. Right. Yeah. But let me ask you this question, right? The moment that the NFT space starts getting adoption, right, and with this low fee model, right, and Valve understands that their Steam store, right, cannot compete with the existing cost structure. What are they going to do? They can afford to lower down their costs, right? Yeah. More and more competitive and more and more competitive, right? Yeah. It is interesting though, while Valve basically said, we don't want any NFTs, kind of any games that have an NFT focus, kind of onboarded onto Steam, which they just don't want them to disrupt the Steam store. Yeah. Whereas Epic Games, right, is basically, supporting that because Epic doesn't really have their own store that they can monetize off of, right? I actually see, the future of NFT assets, right, to be a thing if there's certain specific games that allow like broader adoption of like let's say one game, right, that their store is not on Steam and that game gets a lot of user base. Yeah. That's going to be the catalyst that's going to drive a significant amount of adoption, right? Yeah. And then the other thing that I see that's going to be pretty interesting in games when it comes to NFTs, right, would be the composability of NFT assets, right? So, let's say, you're a brand, you're a Nike, you're Adidas, right? And you create an NFT, right, of this like really cool looking sneaker that you can wear across 20 games. Right. Mm-hmm. Well, I buy this NFT and my character can wear the same exact sneaker, but in 20 different games. Yeah. How cool is that? That's pretty cool. Yeah. Yeah. I think like one of the bigger issues as to why these games can't compete, even if they were similar quality games, is just the user experience right now on something like Steam is just so simple, right? You just log in, you click a button, like one click to pay, download, install the game, and do it directly from the Steam app. And then if you look at like the current blockchain games, like even like if you want to play a game on Solana, you have to figure out how like a Solid or Phantom wallet works. You need to figure out how to get native Solana to pay the transaction fees, stuff like that. And it's like I know there are some games that are trying to integrate the user experience like directly on in an app if it's an app-based game. So like you're transacting like NFT on like say like a Solana DEX, but like you don't actually use the Solana DEX to just the liquidity is sourced from the Solana DEX within the app.
but that's still a bit in its infancy. The one thing I do think that blockchain gaming has going for it, though, is the current big players like Blizzard, Activision, like Valve. They seem a bit rigid in their ways in terms of like how they develop games and how they like monetize games, to a point where like, for example, if blockchain gaming does take off, I don't really see like the Blizzard suddenly launching a game in the next few years using blockchain technology. What are your thoughts on that?
I actually have a decent amount. It's interesting that you bring this point, right? Over the last 2 or 3 years, right, we've probably seen kind of like the greatest challenges to AAA games that we've ever seen historically, right? Let's look at some titles, right? Bethesda released Fallout 76, right? When they released Fallout 76, that really wasn't a good showing, right?
Yeah.
It's played with bugs. People did not enjoy it. Look at the reviews on Fallout 76, right? It took them like 2 years to kind of repair that game to a level where it's now playable, right? Similarly, CD Projekt Red, which were the developers are kind of like The Witcher, right? Released Cyberpunk, right?
Yeah.
And when that came out there, it was like, littered with bugs, right?
Yeah.
And look at the cost of development for these kind of like.
Yeah, it's so expensive. I think that was like probably like the most hyped game I've ever seen. Like people were so excited for that to come out, and then it was just like
correct. And so I do think that there's going to be challenges to kind of like the entire AAA game type of ecosystem, right? And you take a step back and you look at some of like the most successful games, right, that people have been playing for a long time, right? Let's look at so for example, let's look at the Dota franchise, right? I'm a huge player of Dota. And I played Dota when it was still like a Warcraft 3 mod.
Yeah, me too.
yeah. And then that evolved, we can go through the whole history of all this thing. Yeah. I actually think Dota was Blizzard's biggest mistake was not hiring IceFrog, and then Valve got IceFrog, and then Dota 2 was developed on by Valve and all this stuff, right? And look at the ecosystem that Dota 2 has, right? It's been going on for like 11, 12 years, right? This, I actually say you can use Dota 2 as an analogy for what the next crypto game should be, to have a user base that will continually play it. Dota 2 is a game that people have been playing for more than a decade. They still come back to it. There's constant development. It's so engaging, right? Yeah. The value of a lot of the items in Dota 2 are still worth a significant amount of money because of the ecosystem. And the game is definitely not play to win, right? Every single item is all cosmetic based, right? You can't really buy something to gain an inherent advantage whatsoever, right? It's super fascinating, right? But look at the development cost of Dota 2. That was an exact replica of a Warcraft 3 modded map. The concepts of the game are very, very simple. Now, of course, I think they probably spent a lot of dollars, a lot of money onto this stuff, right? But if you look at the
initial version basically had no budget.
Exactly. Even like, for example, like I think Fortnite, right? I don't know the exact specifics of Fortnite, right? But Fortnite was basically released when Epic was having a lot of economic troubles, right? And that became like a sleeper success. Like massive adoption and all this stuff, right? I don't even think they spent that much money developing Fortnite, but I could be wrong on this. I do want to say, right, I think gaming companies are, they realize, right, the AAA way of making game titles may not be economically feasible, because if they spent like hundreds of millions of dollars developing a game and it turns out to be a flop, well, you're kind of screwed. Right. Case in point, I do think if you look at Activision Blizzard, right? If you look at what games have they basically failed on developing, right?
It's quite a bit.
But I would say one of their biggest failures is probably Diablo 3. Diablo 3 was probably a big failure, right? But then they're releasing Diablo 4 many years after. But hopefully that's going to be.
I don't know too much about like their revenues and stuff like that, but it feels like to me that they're basically entirely driven for like the past 10 years by like the revenues of World of Warcraft. I feel like that's got to be like
also Hearthstone. Hearthstone is a very big driver of the revenues as well.
But both those are basically, I wouldn't say pay to win, but they have like a lot of in-game costs. Whereas like the games they released, like the real-time strategies games they released, you basically just pay like a one-time fee to play, and like the entire game is unlocked, right? So like I feel like that model has sort of died down for them in terms of like it's difficult to monetize something where you spend like X amount on a game and then your users just pay like a one-time fee for the game and don't constantly purchase like in-game items, or in Hearthstone but buy new packs, stuff like that.
Yeah, absolutely. So Hearthstone, you can say Hearthstone is a pay-to-win model, but it's a pay-to-win model that works, right?
Yeah.
And Magic the Gathering Arena actually followed in the footsteps of Hearthstone, and I actually am a Magic player as well, right? Once Magic the Gathering Arena came out, I never touched Hearthstone again because I fundamentally think Magic the Gathering is just a much better game than Hearthstone. But Hearthstone is much more casual friendly, right? Now, if you kind of look at the dynamic, if you look at dynamics theorem, right, they can implement a pay to win strategy and have people constantly engage and buy packs and all this stuff, right? They've experimented that with Diablo 3. They had an auction house, right? That auction house came out and they had to shut it down because the moment that the auction house came out, the entire game became just like, completely pay to win. Nobody really enjoyed the gaming experience. I think users are kind of flooding out. And, they made a decision of removing the auctions. And on the auction store, they made a lot of money because they took like a 10 or 15% cut off of every single, sale of an item, right? That's a huge, that's a lot of money.
Yeah, it is quite a bit. It just seems like the way to do play to win, you sort of have to disguise it in a way where it like the user experience doesn't feel completely pay to win. Like the skill aspect needs to be there in a way so like the user doesn't get like discouraged from playing and seeing like his opponents basically paying more for the in-game assets that allow them to do substantially better in the game.
Absolutely. It's a combination of also like the matching engine has to do a good job too. If you're a free to play player and you have like a deck and it's all free to play cards, right? The match engine should match you with other free to play players. You can't match with like someone with like all of these like epic cards where they spent like a lot of money on these decks, right? It just it wouldn't work out, right?
I think it would not be very fun for the free to play player.
Exactly. And it wouldn't, you'll lose player base, right? I think Hearthstone does a good job of this, right? Same with Magic the Gathering Arena. So all of these, right, are the way that gaming. I'm a huge gamer. Right now, how do I think about gaming and crypto? I think it's uncertain, right? There's a lot of things that I could see that could be engaging for having the crypto ecosystem, right? Right now, we're actually not that focused on looking at gaming projects because it wasn't kind of our bread and butter to start off with. But for me, just because I'm a gamer,
I have a personal interest in it.
I have a lot of personal interest, right?
All right. I think that's all we have for today. Thanks for coming on. I really appreciate your insights. It was a great talk.
Yeah, no, absolute pleasure.